Good afternoon, everyone. I am Erin Oots with 10 at the Top. I facilitate the Upstate entrepreneur ecosystem and all things related to helping founders start and grow their businesses. We are very excited to have you here with on section part 2 of a 3-part series on how's business really. How's business really? The first part of our series was on show me the paper trail. Thank you, Earl. Show me the paper trail. This was presented by Anna Para with the Women's Business Center at Community Works, and this went over where to find the numbers. Where to find to use your credit card statements, to use your bank statements, to use your receipts, to try to figure out how to capture all of the numbers that are related to your business. And then the second part today is going to be about numbers don't lie and organizing the numbers. So Earl Gregorich from the Small Business Development Center in Greenville specifically, he's the Greenville area manager, is going to talk about how to put those numbers in order so that they will tell you a story. And then our third part, which will be in May, will be presented by Jerry Smith with SCORE. He is going to talk about the story and telling the story of those numbers, how to interpret them to see what they really are telling you, but most importantly, how to set your business goals and then make sure that the numbers are helping you achieve those goals. So we are very excited. These are all being recorded so that you can refer back to them. You will see on this particular slide that Earl has the video and the slides here with the link, but also Justine Allen over at 10 at the Top, who's making all of this possible for us, just put the link in the chat. So please feel free to copy that. Afterwards, we will send a follow-up email to you with these links in the email, as well as links to the slides. So I'm going to turn this over to Earl, and I'm very excited for y'all to hear from Earl, but also feel free to unmute yourself and ask questions. This is really about your business and your numbers and how to put them together so that you can set the goals and make sure your numbers are leading you to the goals. So Earl, all yours. Thank you so much.
Right. Thanks, Erin. Appreciate that intro. And I just wanted to reiterate the fact that this was number 2 of the 3. And looks like we have Jerry on with us this morning. And you'll hear a little bit about the SBDC here in a moment. But Jerry, do you want to tell everybody what SCORE is about for a minute or two?
Sure. Thanks, Earl. Yeah, so the 3 of us are resource partners for the SBA. Earl, obviously, from the Greenville SBDC. Anna, who's not online right now, part of the Women's Business Center. And I'm from SCORE. And we're SCORE is the sort of the all-volunteer nonprofit arm of this this collaboration. And what we do as volunteers is mostly its focus is on one-on-one mentoring. So that gives you the ability to just jump right over to our website at piedmont.score.org, and then click the link to request a mentor. And not only the content we're covering today, but other things you may have challenges with, you'd be able to work one-on-one with somebody. That's sort of the main focus of the SCORE organization. We also have educational tools, workshops, and such. Part of what we're doing today, and you can see those also from the website under the Take a Workshop link. And like Erin mentioned, I'll be presenting in May on the 3rd part of this series. So hopefully everybody can make it over there, and look forward to what Earl has to present to us this morning.
All right, thanks, Jerry. So we'll go ahead and get started on today's information. So if you want to go ahead and grab a screenshot of that, or that slide right there, you'll have the links to the prior session, but we'll be covering some of that information today as we work through today's materials. So just a little bit about the SBDC, who we are, in case you've not crossed paths with us to this point. The SBDC network consists of about 20 offices here in South Carolina. We're part of a network across the United States of about 1,000 offices. We're all primarily entrepreneurs of present or in the past, or we have worked in a capacity to help small businesses, probably most likely in the lending industry. So when you work with us, you're working with a fellow entrepreneur, basically, is all I want you to get out of that. And some of the things that we do, we focus primarily on the training, education, and resources aspect of running a business. So if there's a challenge in a small business, we probably have a resource for it, whether that's internal training that we do, much like you're getting today, some form of a consultation that you can do with us one-on-one to address a particular challenge that you may be having with your business, and connecting the dots with resources. So we were pretty well connected, not only here in the Upstate, but across the state. And if need be, we can even sometimes bring a national resource to bear on a particular problem. So that list that you see there is a very short list of the things that we see on a daily basis when we talk to small business owners. So I tell everybody, we're your best first phone call. We don't cost you a thing, and we're pretty well connected and well educated in entrepreneurship. So hope to see some of you soon after this this presentation. So today we're going to talk about how's your business really, and how the numbers don't lie, and how we can organize the numbers in some fashion that you can make heads or tails out of them. So in our first class, we introduced Christina Chris, as we go by in most of the slides. And you can see here her persona. She owns Apex Services LLC and is a consulting firm. She's not very numbers savvy. You see there, she doesn't have really any kind of bookkeeping in place or an accounting system set up, but she needs to hire or contract some part-time graphics talent. So what we did in that first session, just real quick, is we talked about what kind of information Chris might need to have in order to make this kind of a decision. How can she hire somebody and still be able to afford to pay herself, which hopefully she's doing at this point. And you see quite a list there of some of the things that we had included into this binder, so to speak. This is an actual physical binder where we were gathering things like your bank statements, supplier lists, vendor lists, any kind of documentation that you might think would be of value when you're trying to make a decision within the business, and frankly, to keep the business sustainable in the event that there might be a disconnection of services, a disaster of some sort. This book comes in handy for that kind of operations as well. But primarily, we're talking about how do we organize these numbers so we can actually make sense of them. We don't want this to be just a pile of papers or a filing cabinet with a bunch of important documents that really can't be boiled down to something that you can actually make a decision with. So you see that list there. Today we're going to take the next step, and we're going to focus in on the financial statements that you might want to keep in this document or in this binder, and how we might take the leap from paper and get into a digital format to make this easier to understand and to make it even more organized. So this is kind of a roadmap of where we're headed. We've taken, hopefully at this point, that pile of papers on the desk, and we've organized it into some fashion, a binder of the main documents that you might need to do some sound decision making in the business and stay on top of what's going on. And then we're going to move that information into some digital formats, and we're going to talk about some of the different ways that you can go about that, and we're going to go over an actual example of a spreadsheet that you can use to do this as one of the more simplistic steps to take. The note that you see there on this slide, though, says you you're maintaining information, and it's going to be viewed differently by different audiences. So internally, you're going to need it to make decisions. Bankers may need some of this information to discuss lending possibilities with you. Same way with investors, but all three of those entities right there, and there are others, those three will all look at this information that you're about to present or you're about to pull together in different ways from different angles. So just make sure as you're keeping the information and you're deciding what information to pull together, that you're pulling together that information and organizing it in a fashion that's going to be understandable and presentable to that audience that you might find yourself in front of. So what are we talking about when we talk about the financial organization? Well, the primary goal here is to put us in a position where we make good, sound decisions. And these numbers are important because if you're going to grow, sustain, possibly even exit your business, you have to have a very good understanding of those numbers to make those decisions that intertwine those kinds of movements within your business. Daily operations, funding come to mind when it comes to those things that tie directly back to the numbers. And when we talk numbers, we're talking financial documents like income statements, balance sheets, cash flow, break even, those things that send some entrepreneurs screaming from the room when they hear those words. But hopefully today we'll take away some of that angst in dealing with those financials. We also want you to understand that when you're considering financial organization, you're putting these numbers together, there is a difference between accounting and bookkeeping. They are two different things. Same church, different pews, so to speak. So accounting are those things that are going to help you with the heavy decision making. Should I take my personal vehicle and put it into the business? Should I lease this piece of equipment that I want to buy, or should I buy it outright and take a loan? Those kinds of decisions are best worked with an accountant. But bookkeeping, on the other hand, that's your daily operations stuff. That's invoicing and keeping track of who owes you money, who you owe money, those types of things. Typically, a small business, you are the bookkeeper. And the example we're going to show you today is going to be kind of that first step of gathering your information and organizing it in a fashion that gets you in the mindset of what bookkeeping means and how it can be of value to your business. Now, when we jump out to our example here in a few minutes, it's going to be an Excel spreadsheet. And people who have been in business for any period of time understand that to really run a business, you need something beyond Excel. And I don't mean today's presentation to say, look, you can do all this in Excel. Well, you can start with Excel. You can use Excel to pull information down and do some analysis. Excel is not your end-all be-all accounting system, though. So I do want to make the point that QuickBooks is probably the de facto standard that you will find out there in the marketplace. There are other options. Xero is another one that's out there. Xero is a cloud-based accounting system. There are some freemium type of solutions out there that help you organize the information in this binder as well. Zoho is one. Wave, I think, is another one that we hear a lot about. So just understand that those quote unquote smaller packages that are out there, cloud-based packages, app-based packages, they may not give you the full picture. They may not give you all of these financial documents that we're talking about here. They may allow you to do invoicing and see who owes you money, but they may not allow you to keep track of your bills. If you want to pay a little bit more, they'll let you track your bills, but usually out of the box, they give you one or two functions, and then you have to pay in order to get that full picture. Where QuickBooks, it gives you the full picture practically in every version that it has. So just understand that. And then there's also the question of, do I use QuickBooks Online or do I use QuickBooks Desktop? Well, chances are, if you're considering desktop, it's because you're maybe you've been in business for a period of time and you've used desktop. Desktop is actually being phased out. In fact, it may be difficult for you to even find copies of that at this point. Everything's going to the cloud. QuickBooks has moved practically all operations and all functions to the cloud. So that is fast becoming a non-issue when you're making these decisions. But understand that there are still a couple of different flavors of QuickBooks out there that your accountant may talk to you about, a desktop version and a cloud-based version, or QBO, QuickBooks Online, with QBO being the most popular one out there. And just for a side note, there are individuals in our network that are QuickBooks Online certified. I happen to be one of those individuals. So while I'm not your best option for full tech support, I could make a good first phone call to at least get you headed in the right direction or help you clarify the question you need to ask into it when you get there. So just keep that in mind as well. All right, so before we jump into the actual numbers, some of the things that we're going to take note that we're going to keep track of, the things that you have organized in this binder probably individually are tracking one piece or one bullet that you see on here, but not actually giving you the full picture and how those interact. So obviously, when you create sales, you also create expenses, most likely. When you have sales and expenses, you can then calculate what profit you are generating. If you have a document that lists all of your expenses, that's great. But if you cannot easily compare those expenses to your sales to then calculate profit, that's a problem. So the spreadsheet that we'll talk about today and the QuickBooks package that we've mentioned, they make all that much easier. And that's what we're here to talk about, is converting those types of items into the digital realm. Some other things that you'll be keeping track of is what is it that the business actually owns, those assets that you have on the books, what the business owes, so those liabilities that you may have, whether that's a loan or some other financial liability that you have. And then with that information, we can also determine to some degree what the business is worth. So that's always something that's very high on the list for most entrepreneurs. I'm putting in all this work, all this time, I've invested all this money, but what is it really worth? And again, with individual documents laying about the desk, it's very difficult to come up with that number. But with organized numbers, you might be able to pull this together. And then that last thing, that last bullet, probably the most important thing that most of our entrepreneurs struggle with is the cash flow aspect of running the business. We're constantly riding the roller coaster, right? Got a lot of cash now, and next month we got no cash, and then the next month a little bit more, and then maybe the next month none. So keeping track of these numbers will allow you to kind of even out that ride, we hope, because now you can do some projections on those numbers and help smooth out some of those peaks and valleys. So if you took everything that's in the binder and you dropped it into the financials that we're going to see in the spreadsheets here, this is kind of what you would do from an organizational standpoint. All the documents, for instance, that have sales information would most likely contribute to the income statement. Those documents that talk about the things that we've purchased or the things that we owe others, that information would most likely drop into the balance sheet and so on. So I'm not going to go through all these bullet points. This is a class in and of itself, but visually I wanted you to see that going from binder to digital results in all of that information percolating down into each of these documents here. So just take note of that, and then we're going to go ahead and jump out into our spreadsheet. So for those of you who would like to have the home version to play along, you can get that at the URL down there on the bottom right, the scsbdc.wordpress.com. You can download this exact spreadsheet without the numbers, of course. You can get a blank version of this. And it's on, there's a group of links on the right-hand side of that, of every page of that website that begin with the letters BP for business planning. The one that you want to focus in on is the one that says BP financial projections. That will be this spreadsheet that we have here. So with that, let me stop sharing this and start sharing the spreadsheet. Do we have any questions or comments at this point? All right.
Well, I was gonna say, everybody feel free to speak up. It's, you know, this is a great opportunity to ask Earl and Jerry questions, and no question is, I don't want to say too dumb, because that every question is worthy.
Right.
Because there's no reason why anybody would ever know this unless you had Earl or Jerry's jobs. So Lisa has raised her hand.
Go ahead, Lisa.
Hi, I just had a question. I recently started with QuickBook Desktop. I started at the end of last year. Should I be concerned that it's going away, or it's a lot of work to try to learn it?
Yeah, that's a good question. QuickBooks unfortunately does not publish its timeline on when they're going to actually phase out desktop. Honestly, I've been thinking that was going to happen over the last probably 5 to 6 years when QBO first hit. But I would not fret over whether or not you should be making that leap quite yet. The reason I say that is QuickBooks Desktop will have the ability to download your information and drop it into QBO in the event that you're unable to update QuickBooks Desktop. You should be able to download your file, export that, and then put it back up into the cloud version without too much difficulty. So yeah, I wouldn't worry too much about that.
Okay, thank you.
One thing I will say is you're going to learn very much the concepts of how to operate QuickBooks in the desktop version, but QBO is going to look a lot different than what your desktop version is. So just be aware that at the time that you do make the switch, QBO doesn't look very much like desktop at all. So there will be a little bit of a learning curve there.
That doesn't sound good, but thank you.
You're welcome. All right, so the tool we're going to talk about today, like I said, this is kind of like baby steps. We went from a stack of paper to a binder of information where we've organized those things that we know are the most important. And now we're taking it, we're going to drop it into a spreadsheet that allows us to organize it digitally and do some projections on the business so we can kind of even out those peaks and valleys on the cash flow. And I'm not going to give you a class on this spreadsheet in its entirety. I want to focus on cash flow for the most part, but I do want to kind of give you an idea of where that information from the binder is going to drop into this spreadsheet so you get an idea of where to go with it once you download it. Because I know everybody's going to rush out and download this immediately after class and start working with it, right? So you see here we have a very first tab here at the bottom, and there's a lot of tabs, and that's usually what scares most people initially. They're like, oh my gosh, there's like 13 tabs. This is going to take forever, right? No, it won't, because after you get into about the 6th tab, the rest of it finishes itself. So don't worry about that. So we start with the fact that basically we have to address any orange or yellow cells. That doesn't mean we have to fill all the orange and yellow cells. It just means that those are the ones we want to focus on as we progress through the tabs. And we just start out with basic information. Who is it that's completing this, and what month and year do we want to start this project? And that's very important. You do want to put a month and a year. If nothing else, just put those 2 items in there, and you can come back and change any of this at any time. We then have a starting point. Now, if you're a small business and you're trying to obtain a loan, this sheet right here serves a different purpose than what we have today. Usually we outline how much we need in a loan and what we're going to spend it on and all those types of things. In today's example, we have an active business. We're not asking for a loan per se. We just want to see how the business is going to run and can we afford that additional employee. So all we really have to put in here is what is it we're going to do with the money that we've got in hand. In this particular example, we are adding that we want to purchase a van, I think, with this example, but normally this would be used for preparing for a loan. In our cases, we're just primarily concerned with how much cash do we have to operate with from this point forward. We have the opportunity to drop our payroll information into the spreadsheet. So you may be sitting there thinking, gosh, I'm just one person. I don't have any payroll. Why would it be asking me that information? Well, that's great. You can skip this tab. You don't have to put anything into it. But if in this case, Chris is asking, can I afford an additional employee? This is where we would add that additional employee to the example should we want to run that projection and see what it looks like. So we've got one full-time and one part-time. We've already added the individual in there that we want to see if it works. And we can easily add another one if we want, another part-timer if we want, or we can take the part-timer out completely, whatever, whichever works. It's easy enough to add and take people out of the equation here. The spreadsheet will also allow us to calculate what the employment costs are. So those things that typically are a mystery to most entrepreneurs, you know, if I hire an employee at 10 bucks an hour, that's a $400 a week expense, right? No, there's additional expenses associated. There's taxes involved and benefits possibly and things like that. So the spreadsheet allows for that as well. Spreadsheet will automatically calculate years 2 and 3 of your payroll, and you can show any kind of raise amount that you might want, whether that's just a standard cost of living, which is what this defaults to, or if you decide you want to provide something different, you can change those percentages to increase or decrease the amount of salary that you're going to give your individuals year over year. You then get to drop in your sales information. So we break this out into 6 categories, and you can put in the information of all of the revenue generation sources that you have within your business. You just put in what each one is, what the units are that it's being sold in, how much you sell, in this case, $80 per hour for consulting services. That particular service does not have a cost of goods. It is a service, it's not a product. So we have not assigned any cost of goods. But the next one down here, product sales, the average ticket that we sell is about a $25 ticket, and that carries cost of goods of $15. And that allows us now to calculate how many of these items might we sell in a month, and it's come up with our total sales per month for each of those categories. So this allows you really to dig deeply into the details of what actually generates the sales dollars for your business. And again, you can come in and say, well, if I add that additional employee, hopefully they're going to add additional sales, or at least allow me to produce additional sales. What does that do? And you can then adjust these numbers to make this picture more and more realistic. So we've taken that information, it was that pile of papers that we organized in the notebook, and now we've put it into a format that we can actually play with those numbers, so to speak. We can run what if scenarios against those numbers. It's easy enough to open the book and see that you had X number of dollars of sales in a month, but you can't look at that piece of paper and say, well, what happens if I had to increase that by $500 more? How would that impact my business? You can't do that with just a piece of paper. That's what the spreadsheet is meant to do.
Earl, can I make a comment on this?
Absolutely.
Yeah, I've seen several versions of that. If you can flip back one more slide just to the one that you were just on. So there's a lot of different sales forecasts out there. This one's done particularly well for the reason that that top block there. You're able to itemize things in a way that makes sense to the entrepreneur. So think about your own business. In this case, in the example with Crisscross, is she's doing these things on a service. So you got the hours, the ticket sales. It makes a lot of sense for her business. But think about your business, and it's the same sort of thing. If you're a baker, it might be how many bakery items you're selling. The cost would be what it would take to make 1 unit of that, 1 cupcake or something like that. If you were in some other service industry, maybe hours make sense. But what's really nice about it is when you get into the meat of that, the spreadsheet here, you're able to quantify in the units that make sense to you. You don't have to just talk about dollars and what if sales went up by $500 a month. Sometimes that's not directly intuitive, but if you said, oh, if I did this many of the items that you do for your business, oh, that makes a lot more sense. And it brings in the whole idea of, is it realistic? Because you're looking out into the future with this spreadsheet, and you're always trying to not only quantify what's out there, but you have to somewhat justify to yourself, or if you're presenting this information to somebody else, a banker, financing person, to be able to understand why. When Earl has these, that top line anyway across the board at 100, but let's say she started ramping business up and it was 120 or 130. The first question that's going to be is why, what's happening there? And it could be, oh, we're going to do some additional marketing, or I'm going to free up some time and devote it over here to this category. But you want to be able to justify in your mind, how those things are growing and the reasons behind it. But the main comment is this is a really, really well done spreadsheet because it allows you to view it this way. It may be a little overwhelming when you first look at it, but if you spend 10 minutes or so with it, you'll see the flexibility. Thanks, Earl.
Sure, thank you. And and that's a good point. This results in an aha moment for a lot of entrepreneurs. They put in the price, they put in the cost of goods sold. They come down here and they say, well, how many of those do I actually sell, and what does that actually result in margin or total sales? And then when they bump it up, they realize it's not a 1-for-1 match in most cases. So increasing sales is not always going to result in that grand total that you thought that it might result in. And this will give you a clearer picture of that. So yeah, that's a really good point.
Good. And Earl, Lisa has a question again.
Okay, Lisa, go ahead.
Hey, sorry to keep asking questions.
Well,
So cost of goods sold is it's embarrassing, very confusing for me. I have a service company. We're erosion control specialists. So we put like matting, netting down on the ground to keep the seed and fertilizer there. So my question is if we are a service company, could I claim the materials purchased for the job as a cost of goods sold, or is that only when you're like a product driven company?
No, cost of goods sold can be different things for different companies. I had all of my businesses have been service based. It's all been consulting. Everything that I owned was up here, and it was converted to business, right? And you would say, well, that doesn't have any cost of goods sold. But the fact of the matter is, in many cases, it did. I had software that I had to use in order to deliver the information. I had, cost of travel and so on back and forth to clients. Those are all things that if I chose, I could put into that cost of goods category. If I hired a third party to do some of the work for a client, I could count that as a cost of goods if I chose to. Now, there are certain things within the realm of what they call GAAP procedures that the accountant might say, yeah, that may not be a good item for cost of goods. But the fact is, you may have directly attributable costs to the delivery of your service that you could consistently drop into that cost of goods sales category. But be consistent. Don't use that cost of goods element this month to calculate cost of goods and then not use it the next, and then add it twice over the third month and so on. Choose what you're going to use as cost of goods and use that consistently across the board.
And Lisa, that is a great question. And everybody, please do not ever apologize for asking one of these questions. The only reason we know these things is because we've been doing this a long time.
Yep.
And that is, so absolutely, these are great questions. And Earl, you know, along those lines, so if somebody's a caterer, that's a service business, but each job has food connected to it.
Correct.
So would that food related to that job be cost of goods sold? Or is that a different, I don't mean to confuse things too much, but.
No, normally in a situation like that, we would separate the labor from the food, and the
Okay.
labor would be its own line item, and the food would be, we would sell the food at a particular price, and that food would then have its own cost of goods sold. Because of the fact that, you know, you may cater a job that only takes 2 people, less labor, but the food's the same. And the next job you do, it takes 10 people, less food, but cost of goods for the food's the same. So you want to keep them separate so that you have some consistency across the board, both when you're calculating your quotes and when you're recording the end results. So yeah, you may, that's actually a really good point, because you may find out when you try to push things into this model, the way you're accounting for things right now may not be the right way to do it. And there may be a better way so that you can get a much more detailed picture of what the profits truly are. That's probably the biggest thing that comes out of this particular part of the spreadsheet, is the fact that most people don't know exactly what their profit margin is. They think they can ballpark it, but until they do something like this, they don't know exactly what it is. Okay,
Earl, thank you very much. And then there was another question. On the WordPress site, and I apologize, I'm traveling, so my internet's not so good, but where specifically is this spreadsheet? It's on the right-hand side in the group of links that begin with the letters BP, the one that says BP/financial projections. That'll be this spreadsheet. Good, thank you, Earl. That's very helpful. Sure. So as with the other, you'll see a trend here. You'll fill in the detail information on one tab, and the following tab then will spread it out over the next 2 years. With, in this case, we're showing a 6% increase in sales year over year. Now, most businesses don't consistently go by a specific percentage year over year. If this model does not work for you, you can come down and change the individual months again to accommodate maybe a different growth pattern rather than a flat 6%. But the fact is, this will spread out your sales over the next 2 years, giving you some idea of, if year 1 is an indicator of what year 2 and year 3 might be, this is the amount of sales you can expect. And that's how that works. Spreadsheet will also allow you to accommodate whether or not you collect all of your money up front in cash form, or if you actually invoice people and allow them pay on terms, say 30 days out. And then, of course, we also can accommodate individuals that maybe don't pay us on a timely manner or at all. Unfortunately, that's reality, so we put it in the spreadsheet. So you can accommodate for that also. The rest of this tab typically does not apply to most of the businesses we work with. If you're adding additional assets in years 2 to 3, we can accommodate that. If you're going to have a line of credit considered in the mix, that's in here, and so on. So usually you don't have to do a whole lot of work here on tab 4. This is where we gather all the expenses on the business. So all that stuff that you have in the binder that represent an expense, there's probably a line item right here that goes with it. And we put in the amount we spend each month, or that we expect to spend, that we're going to budget, if this is a projection type of a situation. How much do we expect to spend on these expenses that are listed to the left? Of course, you can change these to match your unique business. You don't have to necessarily use the same terminology we do, but that's just a really good representative mix of what we find in most typical small businesses.
That then adds in things like the fuzzy numbers, as we call them, the depreciation and the interest and all those things get added in, and then we end up with a total amount of expenses on a month-to-month basis. And as we've done on some of the other input, we will project years 2 and 3 with just a standard markup. We all know prices continue to go up, they never go down, right? So we show an annual increase in those expenses over time, which of course you can adjust if you choose to in these columns here. But this then will total out what your total expenses might be over the course of each year 1 through 3 and give you an idea of where you're headed with that. So everything up to this point is taking everything from that binder and dropping it into the spreadsheet. At this point, the spreadsheet is pretty much done. It will calculate on its own the bulk of the information left. You see that as we're moving into these tabs, the yellow and the orange is fading away, right? We've only got 2 or 3 columns or a couple of rows, and the rest is being calculated. So this spreadsheet right here is really what allows you to analyze all the numbers that you have in that binder. And what we want to look at primarily is this part of the spreadsheet here. So up here is all the sales information that we put in, all the information that said how much we're going to make and earn, calculating in that accounts receivable in this particular instance, so total cash in. And then this section here, this is all expenses, all those things that we're spending money on. It's minimizing that expense spreadsheet that you saw into just a few lines. The payroll is in here, taxes, all of those things are pulled together here. And then we put in a certain amount that maybe we're going to pay the owner outside of payroll, if that applies. And then we're left with this bottom section, which, like I said, is, in my viewpoint, probably one of the more important parts of this entire spreadsheet. Cash flow projection. How much do we have? How much are we using? Are we going to burn through our cash? Are we going to build our cash? That's where we get these answers. So the way this is read, just briefly, is you have the amount of cash spent, the amount of cash in, the amount of cash in is here, the amount of cash out is here, and then the difference between those two is indicated here. So anytime you see parentheses in a cell, that means you spent more money than you brought in. So that's not always a bad thing unless you string together 24 straight months of doing that. That's a bad thing. But a month here and there is almost expected, especially if you run a very seasonal business. So the key, though, is if you have a negative month, you want to be able to have enough cash in the bank, basically, at your fingertips. You want to have enough cash at your fingertips to cover that shortfall and still have cash left. So in this case, we had $10,000 to start the month. We had a net cash flow, so we spent more than we made, so we have a negative of $1,327. That leaves us with $8,600 in the bank. So we've depleted our bank account by that $1,300, leaving us with that cash balance. But that's okay, we're still in the positive. This ending cash balance remains positive. And as long as that line right there remains positive, we're probably in a pretty decent model. If this remains positive but has a trend downward, that's bad. Don't let that fool you that, oh, those are all positive numbers, I'm good. No, if this was at 8,600 and trended its way down to 3,000 at the end of the year, well, that still is positive, but that's not a good thing. We don't want to continually deplete our cash. So this will give you an idea of, I tell people all the time, gives you an idea of how long I have to live on my cash. If I run out, I'm done, game's over. So at that point, I either have to close the doors or come up with some more money somehow to keep it running. And if you find that you have to consistently come back and add more money and add more money, it's probably not a viable business model. Something needs to change. So it's very valuable that we can look at the data like this, something you won't get strictly from a binder. You have to take that information out of the binder, drop it into a tool like this so that you can see this kind of a picture. And then the spreadsheet will give you years 2 and 3. So you always want to take a peek at year 2 and 3 as well, because again, if we're watching this trend down here, it could look all rosy in year 1, and for whatever reason, something that you did or didn't intentionally do there on years 2 and 3 and say sales or expenses may change that trend in year 2 or 3. So you always want to take another look at years 2 and 3 as well. So I said that once you organize the data, you come up with those reports that everybody runs screaming from the room when you start talking to them about and with entrepreneurs, that income statement, the balance sheet, break even, all of those reports. This spreadsheet produces those. Notice there's no orange on this particular report. And I know this is an eye test right now. This is just your income statement for year 1, month by month. This is probably more what you're used to seeing and probably what you want to see. This is showing you all 3 years of the projection compared to one another so that you can tell, am I doing better over the course of 3 years? In this case, my net margin is going up by 2 to 3% every single year. That's not bad, unless your industry grows by 18% a year, then that's bad. But that's where folks like Jerry, myself, we come into play, because we can help you benchmark your business. If you come in with your numbers here and you're thinking, yeah, I'm profitable, I'm doing good. Well, that is good, but is it good in comparison to the rest of your industry? And we can give you that kind of information most of the time. So yeah,
Comment on this one, too, that bottom line you have here was the net income. If everybody flipped back, you could see that's different than the cash ending balances. So the differentiation there, over 3 years, going from 24,000 to 34,000, you'd be looking at that, just doing the math, you could see how many thousands of dollars you picked up in net income over that 3-year period. That's going to be different than the cash flow because of the financing activities and other inventory purchases and the timings of payables and receivables. So it's really interesting when you look at those side by side. Whereas Earl mentioned, most entrepreneurs will be somewhat familiar with the income statement. They can see what's happening there. That may not always directly reflect what's happening on a cash basis. And, if you got plenty of cash, then it's usually not that big of an issue. But if you're running tight, this could be all the difference in the world, is understanding the difference between those two documents. Thanks, Earl.
And Jerry, that's a really great thing to bring up, because on the cash flow statement, by the end of year 3, there was only 10,000 in cash left, I believe. So the cash was starting to go down again, or 12,000, 13,000. Whereas in year 1, it was as high as 17 or 18,000. Cash flow year 1. Yes. Oh, so to 18,000 in October.
yeah.
So there was actually more cash in the less profitable years than in the more profitable ones.
Mm-hmm. Yeah, and that's a great observation. A lot of businesses think, well, I'm profitable, so therefore this must all work. And that's not always the case. You can have a profitable business and not necessarily have the cash flow that you need, and vice versa. So yeah, great point.
Mm-hmm.
But Earl, wouldn't that be different with the owner's distribution, because that affected cash?
Yeah, if I think on this example, we have an owner's distribution here on 3,000. That obviously takes down the cash significantly, and we've got it across all 3 years. So if you looked at year 1 and said, well, I only took an owner's distribution for, what was it, 6 months of the year?
Mm-hmm.
Yeah, about half the year. And that's one of the reasons why that cash is different. That cash balance, that earnings rate, so to speak, is different. But yeah, that's a great observation, because that is money taken right from the bottom line, that owner's distribution. So
Yeah.
usually that's one of the places we look if we're running tight on cash. That's one of the first lines we look at. So owner's always the
Right.
one to take it short, right?
Yeah, that
Right.
owner's distribution and the loan payment both are sort of after the income statement. So unless you really looked at that from the accounting side, sometimes it's not intuitive. You do think that your payment coming back to yourself would somehow be an expense within the equation of the income statement, but it's not. That comes out after, what they call a balance sheet transaction. The same with the loan repayment, that payment itself, maybe the interest on that payment would be an expense, but the principal repayment of the loan is also not part of the income statement. So again, there's subtle differences. Sometimes they're not that meaningful, depending on the business, but sometimes they can be quite meaningful, the net income to the cash flow.
Yeah, when it comes to the operations of the business, from this point up on the income statement, that's more reality. This down here is where the accountants get to play where they play. And that's where things like tax strategy and those fuzzy numbers, as I call them, because we don't typically generate those, so to speak, from the daily operations of the business. Those occur because of what we're doing. But these numbers from this point upward, those are what occur from the operation of the business. So yeah, that's a good point. That's kind of why they're segregated down here at the bottom and separated from these up at the top, because those are a little bit different in how they're calculated and how they impact things. So the balance sheet is also created for you, and this is probably the most mysterious document to most entrepreneurs. They look at a balance sheet and they're like, I have no idea what this means. But the bank is, this is the first document they're going to ask for, is the balance sheet, because this is the one that they use to determine, is your business healthy? Can it afford to take on more debt? How well invested in the business are you? Those types of questions are very important to somebody who might be interested in coming alongside, adding an investment or providing a loan to your business. So getting to know how to read a balance sheet is very important. And again, this spreadsheet will allow you to produce that. So the last thing I'll point out on this one is it will also calculate break even based on year one. So most small businesses cannot calculate break even, don't know what it is, don't know what numbers to pull to make that happen. This gives you a very good breakdown of how to calculate that both on an annual and monthly basis. So if you don't do the numbers for any other reason, do it for cash flow and break even. Those are two really good things to know about your businesses. So any questions on this tool and what it can do for you? Again, moving that paper data that we've organized into digital realm. All right, let me stop sharing this and jump back to the slides. Basically, at this point, we're kind of opening it up to questions. I only have a few slides with contact information. So any kind of questions or anything at this point?
I noticed that you had other trainings. Do you have any that would help the cost of goods sold, understanding that concept a little bit more? Because it seems like that was that first page where it was almost like the foundation to the additional charts. Not sure if you have any suggestions.
So we do have Financials 101 classes. I think Jerry and Anna both, they both have a version of that. We have a version of that, but honestly, probably the best option for you would be to contact one of the three of us and have us do a one-on-one consultation so we can help you drill down and see what specifically applies to your business. A class like this, we were very general about some of the things that we tell you about, but you can actually bring your books, or if you do a Zoom session, you can bring your QuickBooks up on screen. We can see it. We can point out some things that will help you calculate that.
Okay, thank you.
Mhm.
And Lisa and Rena, who are still here, we purposefully organized these workshops to be a month apart so that in between workshops, y'all could meet with Jerry, Earl, or Anna one-on-one to go take a deeper dive into your own business.
Yep. So just a couple of last points I want to make before we close out for today. After you got this information organized, make sure you're reconciling it monthly. That cash flow statement that we showed you, that really should balance to your bank statements. If the cash at the end of the month doesn't match what you're showing on your bank statement, then you're leaking cash somewhere. And that's never a good thing. You want to be able to account for every dollar that comes in and goes out. Work with an accountant. We do recommend you have an accountant for any small business. Make sure you're updating that notebook, that actual physical paper notebook with the new documents as they come in. And eventually graduate all of this, the book and the spreadsheet, graduate this into that accounting system that we were talking about early. And then the last thing there, secure the data. This is very vital information to you and your business. And frankly, you wouldn't want this in the wrong hands. So make sure that you have this information locked down. If you're not familiar with cybersecurity practice, good solid cybersecurity practices, believe me, we've got a lot of resources and tools to help you with that as well. So keep a right combination of paper and digital. If the lights go out, if power goes out, heaven forbid the tree falls on the computer some night while you're gone, you want to have some basis to be able to recover. So don't just toss away the notebook when you get everything digitized. Still maintain those paper records. You may need them. A lot of people in the pandemic found out how that worked. And then of course in South Carolina with hurricanes and the like, we find out about that quite often with the weather that we get. So there's our contact information. If you have any more questions or more detailed information that you need, reach out to any of us. We'll be happy to help. With that, I'll pass it back to Erin and then we can close it out for the day.
Well, Earl, thank you very much. And it was so nice to have you here as well, Jerry, asking questions and helping to clarify. And Lisa and Rena and Janine, who had to sign off earlier, thanks to all of you for being here. And Katrina Meeks is the SBDC representative in Spartanburg, and she's available to help you with your business too. If you see that, Katrina, thank you for saying hello. If you would like to please put your contact information in chat, that would be wonderful too. Good. Well, our next workshop is on May 3rd, and Jerry will be hosting that one, he will take this one step further into the story. So we saw all the numbers laid out in the spreadsheet and how to put the spreadsheet together. So what do those numbers tell us? And Katrina brought up a really good point of the owner draw. And, so that's telling us that the owner's actually making some extra money or bringing some extra money out of the business. And so it's doing well enough. So Jerry will have lots to talk about next time. And I want to thank all of you for being here and have a wonderful afternoon.
Thanks, Erin. Thanks, Earl.
Thank you so
Earl.
much.
Thanks,
Thank you.
Erin.
Yeah. Okay.
Wow.
Thank you, Earl.
I think
You're
I could
welcome.
start a business. I could start a business now. I think I could do it.
That's a
Hey,
good
Earl,
thing.
would you please tell me when you go to the WordPress site, what is the spreadsheet to click on again?
The one that says financial projections.
Oh, I thought I tried that. I thought I clicked through all of them. Let me just make sure. So, oh, you know what? Because I didn't enable editing. Oh, thank you. I'll put that in the recap.
Yep.
Good.
And you can just download a copy if you want to just include it with
Okay, yes,
the
good
links.
point. It's an attachment, yeah.
Yeah.
Good.
And or copy the link and include that in the links too. Any of that
Good.
works.
Well, Rita,
right.
I see you're still here. Do you have a question or anything that we can help you with? No. Okay.
All
All
right.
right, Earl, thank you very much. Justine, thank you. And have a good afternoon with your shadow.
Well, yes, I will. We always have fun.
Okay, I know you do. All right, see y'all.
Go
Thank
enjoy
you.
that conference since you're up there.
Yes, I know. I'm headed on my way. All right, see y'all. Thanks. Bye.
Bye.